Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be talking about the general market as we are over here in terms of what's happening after this rally that we've had from the $33,000 mark down here. I'll also be sharing my concern, which I think I should be bringing to your attention on the bigger time frame, especially the monthly chart. But before I do that, just a quick disclaimer. Please remember, all my videos are for educational purposes only. Nothing should be taken as financial advice. Please do your wider research before making any investment decisions. So with that out of the way, we'll go straight into it. So currently, we've gone from this bottom here, and I said last week many times that I think that for the time being, the bottom is in and that we're going to be going on to a rally because we were due a rally after a 3-month decline that we had down here. So we've duly got that rally going on here. So we've gone from 32.33, and as I said in many of my previous videos, if you've been watching them, that the first port of resistance that we're going to get is in this zone here around about the $45,500, $46,000 mark. And that's exactly what we've got from here. And we've now come to this point where there's a decision for the market to make. Does it go up above the 46 and then onwards, or does it come back down? So I'll be going into that a little bit more in detail. And if you've been following my tweets, you'll know that I've been mentioning two particular figures. Firstly, the 40,935 that I'm expecting the price to pull back from where it is now at around about the $45,000 mark to come back to around about the 40,935, which is where the CME Futures Gap is, which I mentioned in the last video. And the other figure is obviously the 46,000, which I've said has been the level where we're going to get resisted. So those are the two ranges that we've had with Bitcoin. And if you want to follow me on Twitter, then if you go below my videos, you'll find the Twitter link down here. So I showed you in the last video that we have a CME Futures Gap here at 40,935. And it seems a logical place for it to come and fill this gap here. It doesn't obviously have to do that, and not all gaps are filled, but on the whole, the majority of them are filled, as we showed here, that this gap from back in July was filled recently at the $32,900 mark. So I am expecting a pullback from the high that we reached at exactly 45,500, and the gap is around here. But there is another level just above it actually, which could be a possible retest, and I'll go through that a little bit later on. But before I do that, I just want to highlight a concern that I have. If we go to the monthly chart on the BLX, we can see that the first cycle from 2010 to the end of 2013 here, the green line here is the 8 EMA on the monthly chart. So as you can see, after the first peak in Bitcoin here, we went above the 8 EMA here continuously without falling and had a blow off top November, December 2013. And this was followed by a bear market. But it was after the peak, the blow off top in November 2013, that the price fell below the 8 EMA. And after that, that was followed by the bear market where the price remained below the 8 EMA until we broke above it here in October 2015. And then from there onwards, we went to our next peak in December 2017, where the price remained above the 8 EMA all the way through without falling until the blow off top here. Before the blow off top, for the year and a half before, when the bull market started, the price never fell below the 8 EMA here, and same in the first cycle. However, if we go closer into this cycle here from December 2017 to the current, we do see a different picture emerging. So while we topped out in December 2017 and the price fell below the green line here, the 8 EMA, and then we remained below that throughout this bear market, we did come up above the 8 EMA here and got another peak here in June 2019. And after that, we went back below the 8 EMA until after the COVID situation here, we went back above it again in April 2020, which restarted this bull market, which culminated in this top at 64K. So far so good. And as I've said, in the first two cycles, the price before the blow off top never fell below the 8 EMA. However, in this cycle, as you can see, after the 64K top that we got here, the price did fall below the 8 EMA. And while we recovered above it the following month, back in July, and we had this rally here, unfortunately, we fell below again in December and January, and currently we're still below it here. And this is where my concern is. It raises a number of questions. First of all, while it's uncomfortable to think of it, however, we've got to ask the question, have we topped out here? And have we had a double top over here? Certainly the price at 69,000 didn't close above this top here at 64,000. So while we went up to 69, it didn't close above 64 on the monthly chart. And my concern is based on the two charts that I've shown you throughout the last 6 months or so. The first one being the junk bond market. And I've said many times over the last 6 months that while we've been going up above these levels here, that my concerning levels would be this green line here at 85.5. And we've been tinkering with this a few times until a few weeks ago when we broke below that and actually started to test this line here, which I've said that if we break this with a proper close on a week, then it may well trigger the Dow Jones Index. Yes, it could obviously be triggered down here at this level or this level, but I would get very, very concerned if we close below this. And currently, last week, we came and tested it, but as you can see, we closed just on the actual line itself. So you know that this is a very important support line. And this week, we're just managing to hold our head above the water here. So we've got to keep our eyes on this. And with the CPI figures being released today, and with the threat of interest rates on the horizon in March from the US, that could well topple this over. And this is my concern. So we need to keep our eye on the junk bond market, because this is the first prelude before the Dow Jones Index falls or has a big crash. And this is the Dow Jones Index support lines that I've given you over the last many months now. And I've been mentioning this blue line here, which is a 120-year resistance and now support line that goes back to the 1880s. We also, 2 weeks ago, came to test this line here. And if we come back and retest it again, we may well go under. And that could be the start of the big crash. We are perilously close. Then we are coming back to test these lines, which we haven't done before. We have tested these other red lines, which I've said were concerning lines. But the real ones is this green line here at 33,000. Going back to the monthly chart here, we can see that we normally are not below this 8 EMA on a monthly chart before we have a blow off top or we come to the end of the cycle. But here, things have got muddied now that we are below this. And usually this is a prelude for a bear market. I'm not saying we're in a bear market. I'm not saying this to frighten everybody. But the reason why I've been continuously saying that we must get above the $46,000 mark is because this 8 EMA is currently exactly at 45,200. And we need to really get above it to give us some confidence that the market is more likely to go to the upside. As I've shown you before many times, the Pi cycle obviously topped out at this point at 64K when the two lines crossed here. And this had happened in the first and the second cycles previously. But at this point, because the other characteristics of a blow-off top didn't match up, we didn't think that this would be the top. But now with hindsight, and having seen the 8 EMA being breached to the downside on a few occasions, which you wouldn't expect in the middle of a bull run, then it may well be that we have topped out here as our top. So I'm just bringing this to your attention that we must be cautious, because I wouldn't feel comfortable or confident that we're going to have a continuation of this bull run while the market and the price action is below this 8 EMA here. And this is, like I say, this needs to be crossed over above the 46K mark. And until then, there is a possibility that we come back down. And the reason why you see this blue line here, this is the long-term support line that we've had for Bitcoin all along here. At these points, these points, these points here. And we may well find support down here at around about the $30,000 mark. So if we do get rejected at the 8 EMA, we may have to find support here. But should we break this, and while I'm not expecting this to be broken, but we have to consider that should this line get broken because maybe interest rates are raised, or because the Dow Jones is having a crash, or that the junk bond market has gone below our support level, then this is obviously something we need to be aware of. While I'm not expecting this to happen, but as intelligent investors, we need to know all the scenarios that this break in the price here would take it down, anywhere down to these levels here, which is 24, 20, and 14. Like I say, I'm not expecting that to happen. I obviously don't want it to happen, but we must always be aware that these are, although a very low probability, they certainly are on the table, whether we like it or not. And on the monthly chart, we do have this chart pattern developing with these 3 red candles, which is known as the 3 black crows. This is usually a continuous pattern. And when you get this at the top of a trend, which is here, obviously, from this trend, this is usually a sign of a reversal, which is exactly what's happened here. So while we're having a little bit of a respite here, we could get rejected at the 8 EMA down here and then come back on the next leg down as a continuation from these 3 black crows here. Only time will tell, but we must be aware of what's developing. So I'm hoping that we can close at the end of February above the 46k mark. That's basically where the 8 EMA is, in order for us to continue the upward trajectory. And until then, I am very cautious. I know nobody wants to hear that, but it's just my perspective that I need to bring to my subscribers here. A quick analysis on the daily closes. We came up to the 45,500 over here. As you can see, this candle is a spinning top, which signifies indecision. This is major indecision because the wicks at the top and the wicks at the bottom are very long here. So that tells you that there is major indecision taking place. The market is trying to decide whether it wants to go above or whether it wants to go below this level here. Now, last night, we had another indecision candle close again here. So the market really is in the process of deciding where to go. At the same time, we're forming this bear flag, which has a higher probability to fall to the downside. So this is where I'm thinking that a natural place will be to fall down to, either the 40,900 or the 41 or the 40,000 psychological critical level support here. Okay, so I hope you found value in that. And if you did, then please do remember to like and subscribe and to turn on the notification bell. And if you've got any comments, questions or suggestions, then please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.